Good everyone, Les here from BG Trading. Hope you are well. Today is 8th of February 2024. We're going to be talking about lithium stocks. We haven't been speaking about lithium stocks for quite some time. We did take a lot of stop losses last year on our lithium positions, unfortunately, but that's how trade is all about. We rather protect our positions than obviously keep holding a stock at 50, 60 or 80% down. That makes no sense. It's not a strategy. So always take stop loss. Having said that, most of the lithium stocks have fallen quite substantially from last year. Lithium prices has fallen 80% plus over the last 12 months. I haven't seen any signs of recovery on the lithium market yet. What a lot of people been asking about should be buying lithium right now. That's the big question I'm going to be answering you, and I'm going to go to my watch list of the most popular lithium stocks and which one I would buy, which one I would not touch. Let's have a look. Just want to remind, this is not a financial advice. We're just trading using BGS 20 strategy to chase 20 to 40%. We look into fundamental, technical, and macroeconomic aspects, and then we make our decision using BGS 20 strategy. A strategy that we have developed ourselves. If you like, please subscribe to the channel and go on our Facebook page, BG Trading. You can follow us for more, and also like to invite you to become part of our Facebook community, Buy, Grow, Sell Strategy for share traders. A lot of great quality content over there. So let's start with lithium markets. Understanding a little bit, if you look at the lithium prices, we haven't seen recover at all on the lithium prices. It's still quite substantially below last year. And the problem is when the commodity hasn't recovered, most of the companies that produce that particular commodity or extract that particular product will have its earnings compromised. So companies that originally would be very profitable because the lithium price is really high and then making a lot of money out of that, they would shrink its profitability and potentially even become net loss. For the so-called explorer and not yet producer, that's even worse, because those companies that have not yet producing, maybe not even take forwards with the project, because if the lithium prices are down, that becomes not financially viable. So you really got to be careful with explorers and developers at this market. So we'll be touching in explorers or developers. Now talking about small players like junior producers, such as Sayona Mining, Lithium, Arkadium Minerals, and Piedmont. Those companies, they also will have a massive impact, a negative impact, because they are producing at a higher cost. They don't have economies of scales as companies like Pilbara would have, and therefore becomes extremely dangerous. In fact, we saw at the end of last year, Lithium announcing they would stop its production and until the mid of this year. If lithium prices doesn't recover, I don't think they will restart production. They will sell the product they have already extracted, but they won't be extracting until further notice, until we see substantial recovery on the lithium markets. So let's start with the leading stocks, and then in this type of market, if you really want to have exposure still to lithium, you have to look into the leading producers, company that has a low cost production, low capex, economy of scales, and obviously are profitable still. So Pilbara, PLS, is obviously the number one pick, and the stock has been trading sideways for literally for the last 2 years. We saw some all-time high here in November 2022, and then also in August 2023, mostly led by results, positive results, and huge profits out of high lithium prices. But with lithium prices falling, the problem is those earnings are going to start shrinking, and therefore putting pressure on dividends and pressure on stock price. In fact, this chart formation suggests that we might have a breakout towards the downside, and we could even see if lithium prices continue to stay at the current valuation or it keeps falling further this year, then we might even see Pilbara at $2. Interesting enough, as you can see, leading stocks tend to fall the least, and that's what happened here with Pilbara. Only fell 41% from its recent highs. So at the moment, Pilbara is trading a technically discounted price. If you are looking to place a trade based on those on this double bottom formation, which I don't think is very reliable, because remember, if you want to have the best chance of succeeding in trading, you got to consider fundamental aspects, technical aspects, and macroeconomic aspects. All those three must be favorable for your position. If one of them but two are favorable, it's not too bad. You still can try trade it, but the problem here is we have a low commodity price with EV sales shrinking, especially in the US. So macroeconomics doesn't look that great, and also the fact that the fundamentals are good, but is likely to shrink from the future earnings because lithium prices are lower now, and obviously profits will be compromised. So two of the three elements that we look at normally to make a safer or more likely to succeed entry are not there. The only thing we have here is the chart formation, the stock trading technically discounted price. That's not enough for me, and I will pass any lithium stock at this stage until I see a substantial recovery or some signs of demand increasing for lithium. Okay, so this is a Pilbara. For us, for me, it's not a buy at the moment. Although the chart formation shows that Pilbara is a technically discounted price, I think it could fall further for the reasons I just mentioned. Now let's move to Arkadium Lithium, which the SX code is LTM. This is a merge between Allkem Limited and Livent Lithium, which are both leading lithium producers. So they merged last year and then become LTM. This is also a leading producer. All the projects that Allkem had on the pipeline, like James Bay project, they are there. The stock has fell quite substantially as well since its inception, so which it started around $8.67 and now down about 42% as well. And this is the same case as you can see here. If we come to the ASX, obviously based on the projection, so you can see the net profit and revenue was growing quite substantially from 2022 and 2023 when lithium prices was at all-time high, but then obviously that will fall in FY24 as a result of low lithium prices, and as soon as it falls, then obviously put shareholders off of the stock. So I'm not interested on that one right now for the same reason of Pilbara Minerals. So, and this one in particular, we can't even chart that because it doesn't have enough days in the market trading under that particular code that allow us to make it to a proper technical analysis anyway. Now the third one, and this is where I start getting a little bit interested, and I have actually point these particular stocks, those two stocks. The first one is IGO, which is diversified metal producer, and if I was to actually get exposure to lithium, I would go with IGO or to Mineral Resources, because those two stocks, I mean, IGO is actually trading in downtrend as well, currently down about 55% from its recent highs in 2023. Look, it is in downtrend. It is kind of trying to pick a falling knife here. I don't see any signs of reversal, although these RSI start looking a little bit interesting. So I would stay out of that now. We did take stop loss about $9 by memory, and we rather stay out. So we took stop loss just under $10 right here. Yeah, under $10. And unfortunately, it kept falling. Now it's about 30% below what we our lost. Or stop trading, which is good. That's why we take stop loss, where we protect our position. Now, no signs of reversal. This is not enough for me, although the RSI is looking on the short term not too bad. You know, I would stay out for now. And if I was going to be in one of them, I would look into Mineral Resources. And the reason I'm looking to Mineral Resources is, first of all, has a strong exposure to iron ore. I'm going to delete here because that is my actually trading. there's strong exposure to iron ore, and the fact that iron ore prices are not going too bad, that gives us a little bit more confidence that we could see a potential, at least a consolidation on the current levels for mineral resources. So essentially, still a weak chart formation here, no much of signs of reversal. We could test these $45, but it is still probably the most diversified into a high quality asset, with once again with iron ore trading currently trading at where it is it's 128 US dollars. So yes, I would try mineral resources if I was to get exposure to lithium right now. Now, which brings us to the junior producers. So let's have Core Lithium. Core Lithium is unfortunately a stock that has disappointed over the last year. So we did take a stop loss. We protect about 60 to 7% fall. So that's once again, that's why we take stop loss. Unfortunately, some of our VIP members got a little bit frustrated for the fact that we've been taking stop loss on those lithium positions. But again, if you look at how much money we have saved by taking the money out, taking small loss into lithium stocks and putting into tech stock, growth stocks, retail stocks, and doing all the successful trades that we've been doing, so you would probably still be pleased about that. So no signs of reversal for me at the moment for Core Lithium. Obviously, the stopping, holding production means that revenue won't come in, and then obviously the earnings for FY24 and FY25 will be compromised. So not interested on this particular stock now until we see a solid bounce of lithium prices, or at least a reversal, some fact that allow us to believe that lithium prices will be bouncing in a foreseeable future. Okay, next one is one very popular stock, Sayona Mining. Also, just like Core Lithium, no signs of reversal. No signs of reversal, and the stock is, if you look at the, just take a look here from its recent highs, 71% down. As you said, we saw some tech stocks going like 95, 96% down, like even like Zip, for example, is still down about 85% from its highs. So it just means that we could see further sell pressure on this particular sector and those particular stocks. We could see Sayona Mining even going under maybe 2-3 cents. Who knows? It all comes down to earnings, and Sayona Mining earnings are pretty will be compromised, unfortunately. Another stock that a lot of people have been asking me about it is some Explorer. Let's talk about Explorers. W8C. Unfortunately, this is another stop loss stock. So most of our stop loss last year on lithium, unfortunately. There is a bounce here. The company is Explorer, well funded for future exploration. Now, we tried this trade here, it didn't work. It triggered our stop loss, unfortunately. Now, would you try this? Not because the reasons I just spoke. Even though the company is it's well cashed up for at least for a year of exploration, I'm not interested on this particular stock for now. Maybe change in a couple of months, but not now. I want to see a further signs of reversal. We don't want to be trapped on something like this, and then we see the stock going down towards like 2 or 3 cents. That will be a huge loss. So still downtrend, no good, not interested. Another one, and then AZL, another one that it's been not that good. So we did try this trade, didn't work, stop loss, and then now it's trading quite substantially below our entry, our stop loss. So 36% below our stop loss. So essentially what happened here is this company has reported its PFS in December. So we bought on expectation that PFS will be very compelling. And the market didn't really like it and did not sustain the rally that we thought. Obviously, we got wrong. There's no guarantee in the market. Then the technical formation showed us this particular bearish intersection here. And again, that shows how important it is that all multidimensional facts are lined up. So in this case, we're trying to focus into the fundamentals, but the technical wasn't there. I mean, I was trading a little bit at the formal level. we speculated that the PFS would give a really good rally, but didn't happen. And the macro wasn't favorable as well. So obviously then the stock fell. So always got to make sure we have these three elements lined up in the positive prospect, and then obviously your chances are way better. Now we have the technical aspects into a definitely technically discounted price, but still fundamentals are weak. Company doesn't produce. It's only start developing its project, and then obviously another thing is the macro is not very favorable at the short term, especially with EV sales declining in US. So I wouldn't touch at all on this particular stock as well. So I'm gonna wrap this up here because most of the other stocks are here are exactly the same. Somebody asked me this morning, just before wrapping up, I'm going to go Liontown because this has a very, very good asset. And a little while ago, I said that I was only be looking at buying Liontown around this type of level here, $1.50 or under. But then we did not try this trade. We didn't do this trade. This is just an indication of what we're looking at, but we didn't try this trade. It would have been profitable anyway. Now, unfortunately, or fortunately, because we didn't trade there, it was another lower low here, higher lows and lower low. Now, how low can Liontown go? I don't know. It's currently holding up on this hypothetical support level here around $1. If it breaks out $1 towards to the downside, then we could even go to 50 cents. Once again, because it's not a producer, it's a company that generates no revenue, no profit, and won't be generating any profit for a foreseeable future. It's going to be a taking over target. But at the moment, I don't think many companies are very interested into taking over lithium. And I think there are much better sectors now to explore, like a growth stocks, tech stocks, than looking to these, even retail stocks, than looking to lithium now. We leave lithium for later on when those growth tech stocks done the ride, maybe they start falling, and then that's when we might see the other part of the cycle turning, and then we might see lithium stocks turning around again. At the moment, once again, maybe I'm wrong here. I'm not pulling anyone off the lithium. I'm just saying my personal opinion. I don't want to take stop losses when two of the key elements that we use to analyze our entries are not favorable. Okay, so I'd rather be into sectors that fundamentals are good, a technical formation is positive, and also macroeconomics is positive, like growth and tech stocks. Not all of them, but some of them. Okay, thank you for watching, and I'll see you in the next video. Bye.